Hey Texans, if you're planning to buy a home or if you already own a home, you'll want to pay attention because there are some changes to the federal tax law that are coming in 2026 that could absolutely impact your bottom line. All right, let's get into it. First things first, guys, I am not a tax preparer or a CPA or accountant, so you will want to take this information to them and see how it will affect you personally, okay? All right, guys, so first on my list is the SALT deduction, the state and local tax deduction. It was capped at $10,000. Now it's up to around $40,000. This matters for Texans because we are in a high property tax state. We pay a lot in property taxes. Most of us are paying over $10,000 a year in property taxes alone, especially if you have rental properties. So being able to reduce our federal taxable income by some of this amount that we're giving in property taxes will affect our bottom lines. Here are the things you need to note though. Number one, you must itemize versus taking a standard deduction. This is why you need to make sure and get with your tax professional and see which one can work best for you. The other thing is there are income phase outs. So if your adjusted gross income is over $500,000 a year, then those numbers might look different from you. Number three, this is not permanent. It is set to expire in 2029 unless it gets extended. So from 2025 to 2029, this is when that deduction increase will apply. So act accordingly and plan accordingly. Another change brought to us by the federal tax law changes are the mortgage interest and the PMI, or private mortgage insurance deductions. Let's break down the interest first. Mortgage interest is now deductible permanently on debts up to $750,000. Let me say it again slowly. Mortgage interest is now permanently deductible up to mortgage debt of $750,000. HELOCs do count, home equity lines of credit, those do count as long as the money was used for the home, for home improvement or repair. It has to be used for the home. Other thing is, for both of these, you have to itemize again versus taking the standard deduction. That's for the mortgage interest. Now, the private mortgage insurance, the PMI, that extra few $100s that a lot of homeowners in Texas are paying, that will now be deductible as well. Caveat, it comes with income limits. So depending on how much you make, it phases out between $100,000 to $110,000. So you'll want to get with your tax preparer, see where your income is, and definitely see, can you write off that PMI and save some more money that way, okay? Here is a change, or more like a be aware of, that is coming from the federal tax law changes of 2026 as well. And that is the fact that energy credits are expiring or have expired. We're now in 2026. Those credits expired in 2025. This is important, Texas, because I know a lot of people are making energy efficient improvements like solar panels or HVAC system or energy efficient windows, or you're planning on doing these things because you could get some tax credit for it plus the energy benefits. But no, you'll still get the energy benefits, but the tax credits expired in 2025. So anything that you're planning on doing this year energy wise, you more than likely will not get a tax credit on the federal level. What you can check and see if Texas as a state through local programs offers some type of tax credit for you in that category, okay? So that is more of a be aware and plan accordingly with the new tax changes that have come for us.